Hello guys, good day. Welcome to another video lecture in ACP 311, Accounting for Special Transactions. In this video lecture, we will be discussing another revenue recognition concept, which is franchise accounting. In our previous video lectures, we were already able to discuss other topics related to revenue recognition, like installment sales and long-term construction contracts. So this time, we will be focusing our discussion in terms of the recognition of revenues under franchise accounting. So when we talk about franchise accounting, guys, it includes the distribution of goods or services. It generally involves the grant from one party, who is the franchisor, to another party, which is the franchisee, the right to sell the granting parties goods or services. So at this time, we assume that ourselves are the accountant of the franchisor. Okay? Common examples of franchise entities currently here in the Philippines are, for example, in food industry, we have McDonald's, KFC, or Jollibee. We also have Pizza Hut and Shakey's and the very popular 7-Eleven stores. So they are the most popular entities with franchises here in the Philippines. So in franchise, the franchisor contributes his trade name, products, company's reputation, and trademarks. It also imparts its expertise and on continuing basis provides guidance and duties on the manner in which the franchisee must operate his establishment. The franchisee, on the other hand, provides operating capital and managerial operational resources required for the operation of the franchise business. So the relation of these parties is covered by a franchise agreement which outlines the rights and responsibilities of each party, describes the marketing practices to be followed, details the contribution of each party, and sets certain standards of operating procedures which both parties agreed to perform. So franchising gives the franchisor to the opportunity to distribute his product or services with minimum investment in the franchise outlet. Franchisee, on the other hand, is able to own his business, reap financial rewards, and benefit from the agreement by way of assistance and guidance from the franchisor. So in short, in a franchise agreement, there is a transfer of resources between two parties, which is the franchisor and the franchisee. So franchisor will grant all the rights to use whatever are the trademarks or the trade name under the franchisor to the franchisee. So as if the franchisee will operate on behalf of the franchisor. So in our focus for this discussion is to to determine the timing on the recognition of the franchise fees that can be received by a franchisor. So as what I've said earlier, guys, that we are assuming that we are the accountant of the franchisor this time. So we have three possible sources of revenue on the point of view of the franchisor. First, we have the initial franchise fees or the IFF. Second is your continuing franchise fees or your CFF and your other income. So when we talk about initial franchise fees, this represents initial payment for establishing the franchise agreement and for providing certain initial services associated with the agreement. The initial franchise fee may be payable immediately in cash or for an extended period of time. The initial services rendered by the franchisor prior to the opening of the franchisee's operations usually includes the following. First, assistance in site selection for the construction of building, supervision of the construction activity which involves obtaining financing, designing building and supervising contractor, assistance in the acquisition of signs, fixtures, and equipment, and other activities which is necessary for the franchisee to operate a particular business. So later on, we will discuss procedures on how to recognize initial franchise fees. The second type of revenue is your continuing franchise fees or the CFF. So when we talk about continuing franchise fees, these represents continuous payment to the franchisor for providing specific feature services such as advertising and for continued use of intangible rights by the franchisee. These fees are usually based on the operations of franchises. For example, percentage of sales or percentage of net income. So later on also, we will be discussing on how to recognize continuing franchise fees. And lastly, you have your other income. Now, let's proceed with the um, guidelines on how are we going to recognize initial franchise fees, continuing franchise fees, and your other income. So under initial franchise fees, guys, your initial franchise fee can be paid into two ways. It can be paid on a lump sum basis or it can be paid on an installment basis or a piecemeal basis. So if it's a lump sum, meaning there is one cash payment by the franchisee to the franchisor. So that means if there is substantial performance of the if there's already substantial performance, then therefore we recognize the revenue on its entirety. However, if there is no substantial performance yet, then regardless if it's lump sum payment, we still need to defer the recognition of revenue kung wala pa substantial performance. So later on, we will identify when can we say that there is substantial performance already. Now, another method of paying your initial franchise fee is through installment, meaning there is a down payment and the remaining balance will be paid on an equal installment basis or through the issuance of notes payable or a promissory note. Now, in recognition for your down payment as your initial franchise fee, again, we also have to assess whether there is already substantial performance or if there's none yet. So kung meron ng substantial performance, then therefore, we need to also consider it whether if it's refundable or if the period of refund has already expired. Okay? So if it's non-refundable, then shoot, we need to recognize it directly as our revenue and account it under accrual basis. So again, in accrual basis, we recognize income the moment we have earned it. However, if there is no substantial performance yet, so therefore the revenue will be deferred first and it will be accounted under installment accounting. Si note naman or yung equal payment of the balance, you also need to consider and assess whether there's already a substantial performance or not. So same earlier, kung meron ng substantial performance, and if the collectibility of the note is reasonably assured, kung yes siya, then therefore you recognize the revenue. Pero, you recognize the revenue under accrual basis. Pero kung the note is not reasonably assured, meaning there are chances na masyadong ma-extend ang payment of that specific note, then therefore you need to defer the revenue and use installment accounting. Again, in installment accounting, as how we discussed in the previous discussion, installment accounting, we will only recognize gross profit when there is cash collection. Okay? So these are the important points that we need to remember in accounting for initial franchise fees. Okay? We will use these details later on as we have your problems. While your continuing franchise fees and your other income, guys, will be accounted again on accrual basis. So that means the moment we have earned continuing franchise fees and other income, then therefore we recognize it as our income already. We only have a note here when the down payment, which represents the fair measure of the initial services already rendered, that means that down payment will be recognized as revenue. Again, when the down payment represents the fair measure of the initial services already rendered, that means the down payment will be considered as revenue. Okay, let's continue. When can we say that there is already substantial performance? Okay, di ba? Basis man nato earlier ang substantial performance pag recognize nato sa ato ang initial franchise fees. So kung yes or no ang ato ang kung na ba tay substantial performance. So when can we say that the franchisor has already substantial performance? So it's when the franchisor is not obliged in any way to refund cash already received or forgive the unpaid debt. The initial service required of the franchisor by contract or otherwise have been substantially performed already, or no other material conditions or obligation exist. So very guys, very um how can we say that? Very evident that there is already substantial performance, it's when the franchisee already starts to operate. Okay? If the problem has mentioned that the franchisee has already started its operations, then therefore, that's a sign that the franchisor has already substantial performance. Okay? Now, we also have your direct franchise cost. It is direct franchise cost of initial services rendered by the franchisor. It will be deferred first until related revenue is recognized. But your indirect cost shall be expensed when it is incurred. Now, we have two types of franchise cost, the direct franchise cost and indirect franchise cost. So again, as mentioned in the text, direct franchise cost will be deferred first. It will only be recognized as franchise cost when there is already recognition of revenue. Okay? And then, pero ang inyong indirect cost, regardless if regardless of the revenue recognized, we will recognize it directly as expenses. And it is assumed, again, as what I have mentioned earlier, that there is already substantial performance when the franchisee actually commenced the operation of the franchise. Okay? To illustrate the given guidelines earlier or the given na mga guidance nato in recognizing your revenues, kay ang atong major dilemma man diri kay franchise accounting is the timing on when are we going to recognize revenue ang ato ang na-receive na mga or ang kalusan nato i-recognize as revenue ang ato ang initial franchise fees. So for example, we have here McDo Incorporated granted a franchise to Mr. A. De Jesus to sell McDo products. So the initial franchise fee is 10 million, okay? 10 million. But the problem is when are we going to recognize gross profit from that 10 million? And from February to November, guys, McDo Incorporated rendered the following initial services under the franchise contract. It incurs 2 million direct cost of initial service and 50,000 indirect cost of service. And on December 31, Mr. A. De Jesus has already started operations. So obviously, guys, in this illustration, McDo here is the franchisor and Mr. A. De Jesus is the franchisee. So let's account this specific illustration in different cases. For example, when the initial franchise fee is paid in full, when the agreement is signed on January 2, 2020, that's not July but January 2, the following entries would be made by the franchisor on the year 2020. So again, case 1 assumes that there is full payment. There is lump sum payment of initial franchise fee the moment the franchise contract or franchise agreement was signed on January 2. So therefore, journal entries nato diri guys will be for debit cash for 10 million. This is not 1 million but 10 million. Debit cash for 10 million. Credit deferred revenue from initial franchise fee of 10 million. Okay. If you have noticed nga ang ato ang initial franchise fee nga na-receive for 10 million was actually deferred first. Okay, gidefer nato ang ato ang revenue. Nganong gidefer pa man nato ang revenue? Because again, wala pa man ta naka-start, no? Or the franchisor, McDo Incorporated um has not done anything yet. So meaning there is no substantial performance pa. So that means i-defer sa nato ang ato ang initial franchise fee nga 10 million. Okay? Now, to account for the cost incurred from February to November, take note naka-incur ta og 2 million nga direct franchise cost and indirect franchise cost nga 50. So again, Si direct franchise cost will be deferred first. I-defer sa nato ang ato ang 2 million, i-realize lang nato, i-recognize lang nato na as franchise cost ang 2 million pag na natay ma-recognize nga revenue. So for the meantime, debit first it to deferred cost of franchise revenue and then recognize as franchise expenses directly ang atong indirect franchise cost nga 50,000 and then credit to cash for 2 million 50. Okay? So those are the pertinent journal entries from January 2020 up to November 2020. Now, let's have on December 30. Take note that it's on December 30 when, sorry, it's on December 1, it's on December 1 nga si franchise C, which is si Mr. A. De Jesus nga started his business operations. So that means we could say that there is already substantial performance on December 1. Kaya nag-start naman siya og-operate sa iyang business. So since there is already substantial performance, then therefore pwede na ta mag-recognize og initial franchise fees. Okay? Pwede na pud ta kung na natay i-recognize nga revenue, pwede na pud nato i-recognize ang ato ang direct cost of franchise. So in this case, guys, we will now be recognizing our cost of franchise revenue by debiting it. So debit to cost of franchise revenue nga 2 million and then credit sa account nga atong gi-defer earlier si deferred cost of franchise revenue for 2 million. Okay? And then since there is already guys, there is already substantial performance and there is full payment of initial franchise fee. So the entire 10 million will also be recognized as revenue. Okay? It will also be considered as revenue on year 2020. So debit to deferred revenue from IFF para mawala na ato ang deferred revenue from initial franchise fees and then credit to revenue from initial franchise fees of 10 million. Okay? So in that case, guys, balikan lang nato si case 1. So net income here for case 1 on the point of view of the franchisor will be 10 million minus cost of franchise na 2 million minus franchise expenses na 50 million. So that would be 8 million minus 50. So that means your total net income will be 7,950,000. Okay? Your net income in case 1 will be 7,950,000 from 10 million initial franchise fees minus cost of franchise fees na 2 million minus expenses of 50,000. Okay? Now, let's proceed to another case. So, how about if the initial franchise fee is payable in installment? Okay? Kung installment daw, there is 1 million down payment cash when the contract is signed and the balance in 5 annual installment payable every December 31, evidenced by a 12% promissory note. So since there is a promissory note, then we assume that this is an interest-bearing note. Okay? 12% interest-bearing note. As discussed earlier, guys, two methods can be used to record franchise operations if the initial franchise fee is payable for an extended period of time. So these methods are accrual method and installment method. So when are we going to use accrual method? When are we going to use installment method? Accrual method ang gamiton when the note is reasonably assured. Meaning um there is high possibility that your promissory note will be collected. Okay? So therefore, we will use accrual. Pero kung guys, the collection of your note is not reasonably assured, that means we will use installment method. So later on, we will discuss installment method. But this moment of time, let us use accrual method first. Okay? So here are the pertinent journal entries under case 2 when there was a down payment of 1 million and the remaining 9 million was through promissory note. So on the date where the contract was signed, our journal entry would be debit to cash for 1 million, debit to notes receivable for the balance of 9 million. And then credit to deferred revenue of 10 million. So again, you already know nga nung gi-defer sa nato ang 10 million on January 5. It is again due to non-performance non-performance of substantial activity yet. So therefore, i-defer sa nato ang ato ang initial franchise fees. To record also our transactions from February to November, we have debit to deferred gross of franchise revenues for 2 million, debit to franchise expenses of 50,000, and then credit to cash for 2,050,000. Now, on December 31, again, remember that it's on December 1 na ay substantial performance. So therefore, on December 31, we can now recognize your um, initial franchise fee as revenue, and at the same time, we can now recognize your direct cost as an expenses. Okay? So in this case, what will happen on December 31, guys? So on December 31, we'll have the first installment, okay? We will have the first installment. Take note na ang 9 million nga notes receivable will be payable daw for equal installments every December 31. Okay? December 31. So therefore, ang first payment, guys, ang first payment will be this year also December 31. So the entity received a total of 2,880,000. So that is from 1/8. As you can see 1/8, that's actually from the balance of 9 million. 9 million divide 5 equal installments. So, 9 million divide 5 years. So, every year there is an annual um, payment by the franchisee to the franchisor of 1.8 million. And also, we also have interest income of 1,080,000. So, your interest rate there is 12%. So, therefore, 9 million na balance times 12%. So, therefore, we have a total interest income of 1,080,000. So, naka-receive ng cash si guys, naka-receive ng cash si franchisor on December 31, a total of 2,880,000. So, on December 31 also, we need to prepare adjusting entries. Adjusting entries to record our cost of franchise. So, debit to cost of franchise revenue, which is 2 million, and then deferred cost of franchise revenue for 2 million. So, i-recognize na nato in full ang atong total cost. So, that is why gi-close nato siya kay deferred cost of franchise revenue. And also guys, since accrual method ang atong gamit, again, according to accrual method concept, we will recognize revenue the moment we have earned it. So, since there is already substantial performance nga na-provide si franchisor, so that means we have already earned this income. Okay? Regardless of the actual collection. Okay? Kahit hindi pa na collect ang entire 10 million. So ang i-recognize nato diri ang nga initial franchise fee will be the entire 10 million. Okay? So to recognize the initial franchise fee will be debit to deferred revenue from initial franchise fee of 10 million, credit to revenue from initial franchise fee of 10 million also. So again, we recognize under accrual method the entire 10 million. So therefore, in this case, sa case 2, pila ang atong total net income? So in case 2, we have a total net income of 8,130,000. So that is from revenue from franchise fees nato na 10 million minus cost of franchise revenue na 2 million. So therefore, we have gross profit of 8 million less expenses, which is our indirect franchise cost of 50,000. So therefore, we have an operating income of 7,050,000 plus the interest income. Take note that we have earned interest income of 1,080,000 from our promissory note or from our notes receivable gikan sa atong promissory note nga nadawat. So therefore, the total net income in case 2 is 8,130,000. Okay? So again, just recap, basta accrual, regardless sa collection sa imong total initial franchise fees, you will really recognize the entire initial franchise fee as revenue. Because under accrual basis, we assume that the note or the balance can be reasonably collected. Okay? So that's case 2. Now, what if this time there is a problem? We assume that the collectibility of the note is not reasonably assured. Not reasonably assured. So kung not reasonably assured, we cannot use accrual. That means we will use installment method. So under this method, the revenue from initial franchise fee is recognized only in proportion to the cash collections. So in this case, we will compute for the gross profit rate and then multiply it to the total cash collection for a year. So kung pila lang ang ato ang pila lang ato ang makompute na portion sa ato ang cash collection multiplied it by GPR mo lang pud ang atong i-recognize as realized gross profit for the year. Just like how we computed realized gross profit dito as ato ang discussion sa installment sales. Okay? Now, so you have here your journal entries. Again, same journal entry sa beginning on January 5 when the contract was signed. So debit to cash and notes receivable for 1 million and 9 million respectively. And then credit to deferred revenue from installment or initial franchise fees of 10 million. And another same entry, debit to deferred cost of franchise revenue na 2 million, franchise expenses of 50 million, and then credit to cash for 2 million 50. Now, this time, we also have the same entries, no? Same entries put pagka December 31 to recognize the receipt of the first payment of your installment from your notes receivable, which is 1.8, and your interest income na 1,080,000. So, debit tayo cash for 2,880,000, credit notes receivable, and interest income for 1.8 and 1,080,000 respectively. Now, this time, diri na ta mag-differ si accrual method o si installment method. Dili na ta mag-differ sa pag-compute sa ato ang realized gross profit. Now, in this case, guys, so your entire 2 million will be recognized also. So, debit cost of franchise revenue, 2 million, credit deferred. Debit cost of franchise revenue for 2 million, credit to deferred cost of franchise revenue for 2 million also. Okay? And then, we have here, 'di ba? Since installment basis man atong gamit, then therefore, ang atong initial franchise fee nga 10 million will be deferred first. Okay? Will be deferred. So meaning, i-defer na to ang ato ang gross profit. So debit deferred revenue from initial franchise fee of 10 million, credit cost of franchise revenue na 2 million, and credit for the deferred gross profit nga 8 million. Pasabot, ang ato ang 8 million will still be deferred as long as wala tay cash collection nga ma-kolekta or walay cash collection for a specific year. But for this year, karon nga year guys, naman tay cash collections, 'di ba? So atong cash collection is gikan kay down payment nga 1 million and katong first installment nato nga 1.8 million. Take note guys nga wala pud nato gi-appeal sa pag-compute sa atong realized gross profit ang collection nato from our interest nga 1,080,000 because what will be what will be multiplied by our gross profit rate is only those collections applicable sa ato ang principal. Okay, so in this case, we have down payment of 1 million and our first installment na 1.8 million. So in this case, we have a total cash collection applicable to our principal na 2.8 million times gross profit rate na 80%. Now, where did we get 8% guys? Or 80%? So we got it from your total gross profit na 8 million. Okay? 'Di ba naman tay total revenue, total franchise fees nga 10 million minus 2 million nga direct franchise cost. So therefore your gross profit is 8 million. 8 million over your franchise fee na 10 million. So 8 million over 10 million. So that means we have a gross profit rate of 80%. So that means on 2020, the first year, your realized gross profit will be 2,240,000. Only the realized gross profit. Pero, the total net income will be computed as follows. Okay? We have total income. So, pwede na ta diretso diri as a realized gross profit guys na 2,240,000. Since na-compute naman nato si realized gross profit nato nga 2,240,000 nato kanina, less expenses lang. This is from our indirect franchise fees, indirect franchise cost ka 50,000. So we have an operating income of 2,190,000 plus your interest income na 1,080,000. So therefore, your total net income for this year will be 3,070,000. Okay? Your net income under installment basis will be 3,070,000. So again, balikan lang nato si installment method, recap. So since installment siya, ang imong gross profit will be deferred first. So, mag-realize lang ta equal to the gross profit rate times the cash collections applicable for the principal for a specific year. So that is under installment method. Okay? So this time, let's proceed, guys. Case 3. Okay, in case 3, guys, we assume here that the type of note na na-receive ni franchisor is a non-interest bearing. So as we all know, we have two types of note. The other one is interest bearing and the other one is non-interest bearing. So it doesn't mean na ang term niya is non-interest bearing, it no longer includes an interest, but rather the interest of it is already imputed. Okay, it's already imputed on the total present value. So therefore, in this case, for example, the initial franchise fee is payable as follows: 1 million upon signing of the contract and the balance in 5 equal installments every December 31 evidenced by a non-interest bearing note. So that means ang imong 9 million is ano guys, 9 million is evidenced by a non-interest bearing note. Credit investigation indicates that the franchise can borrow money at 12% and the present value of an ordinary annuity at 12% for 5 periods is 3.6048. Or in short, your present value factor daw as if kung magborrow ng money to use in paying the balance is 3.6048. Thus, the present value of 5 payment will be will be 6 6,488,640 from 1.8 million times 1.8 million kay ano man ang annual installment will be 1.8 million man from 9 million divide 5 years. So therefore na ay payment na 1.8. Multiply it with your present value factor na 3.6048 for 5 years using 12% na interest rate. So therefore we have a total present value of 6,488,640. Now, assuming that the collectibility of the note is not reasonably assured, using the installment method of revenue recognition, then the required entries of the books of the franchisor during 2020 will be as follows. So, mag-iba ang ato ang journal entries diri guys on the date when the contract is incepted or when the contract is signed. Because take note, aside from the recognition of our notes receivable here, we need also to recognize unearned interest income. Okay? So, una-muna, debit to cash for 1 million for the down payment. Debit to notes receivable also for the balance nga 9 million because the total initial franchise fee nato kay 10 million minus balance minus down payment nga 1 million, therefore the balance will be 9 million. And your guys, your deferred revenue from IFF. Okay, this time, how did we come up with the deferred revenue? So una guys, we need to compute for our unearned interest income. So we have unearned interest income of 2,511,360. So that is the difference between the face value of the note nga 9 million and the present value of the note on January 5, 2020, which is 6,488,640. So that means there is an unearned interest of 2,511,360. So debit, a credit to unearned interest income. And then take note guys that your initial franchise fees here will now be changed. So your initial franchise fees dari karon guys will now be the 1 million payment plus the present value. Okay? 1 million payment of on January 5 and the present value of the note on January 5. So that will be 6,488,640. That's not 360 but 640 plus 1 million. So therefore, your total present value of your IFF, which is also the amount of your deferred revenue from initial franchise fee, will be 7,488,640. Okay? So since installment man siya, guys, so later on, i-compute na to ang atuang total collection and then we compute our GPR I-multiply nato whatever is the amount of our total cash collection for the year to compute for the realized gross profit. Okay? Now, here's the entry also for from February to November. So same lang from our entries earlier. Debit to deferred cost of revenues for 2 million, another debit to franchise expenses for 50,000, and credit to cash for 2 million 50. Okay, this time. Now, Dria guys, there is since the note nga gi-issue ni franchisee is a non-interest bearing, so that means walay separate payment for interest. So as what I have said earlier, the interest is already imputed or is already included sa payment nga 1.8. Okay? So meaning we need to determine from this payment of 1.8 million kung pila ang applicable para sa interest income and pila ang applicable para sa ato ang principal. Okay? Now, let's have here your adjusting entries. So una, i-recognize na nato ang atong interest income. Okay? So to compute for our interest income, you just simply compute your interest rate towards your present value. So natin present value nga 6,488,640 times 12%. So that means 778,637 out of that 1,800,000 is applicable for our interest. Okay? So that means gikan sa atong 1.8 from our 1.8 million, 776 o 778,637 is applicable for your interest. So that means only 1,021,363 is applicable for your principal. So later on, ato nang gamiton ang 1,021,363. But this time, i-account sa nato ang cost of franchise revenue nato. So, debit to cost of franchise revenue na 2 million, credit to deferred cost of franchise revenue for 2 million also. Now, this time, since ano man siya guys, since installment, so that means dili nato idiretso og realize ang ato ang deferred gross profit. Okay? Dili nato i-realize diretso, ato sa siyang i-defer. But this time, pila ang atong deferred gross profit? Okay? Pila ang ato ang deferred gross profit? So, di ba naman tayo bag-o nga deferred revenue from IFF, dili na 10 million ang atong deferred revenue from initial franchise fees, but rather, ano na, new amount, which is 7,488,640. So that is from the present value of the notes receivable nga 6,488,640 plus the down payment nga 1 million. So that makes it 7,488,640. Minus nimo nga minusan nato og cost of franchise revenue guys na 2 million, then therefore your deferred gross profit nato is 5,488,640. And since again, installment basis ato ang gamit since the note is not reasonably assured, so we need to defer it. We will only realize it when there is cash collection, equivalent to our gross profit rate. But this time, pila tong gross profit rate, guys? So we have total gross profit of 5,488,640 divide our total new values sa initial franchise fee revenue nato nga 7,488,640, or in short, natay realized gross not realized gross profit but gross profit rate of 73.29%. Okay? So this time, let us compute for our realized gross profit. So ipag-compute na to sa realized gross profit, guys. So we need to compute first the total cash collections applicable to our principal. So we have here, obviously, the down payment that is solely applicable to us for our principal. But this time, we have computed earlier na from our 1.8, 778,637 of that is applicable for the interest based sa atong computation earlier. Okay, kani. Asa to? Based sa atong computation earlier. Okay, based atong computation earlier nga asa na yun? Here, 778,637. Okay? 778,637 is applicable sa atuang interest. So therefore, from 1.8, minus 778,637. So only 1,021,363 is applicable to our principal. Plus 1 million nga down payment. So natay total cash na 2,021,363. Multiplied by our gross profit rate na 73.29. So therefore, we have realized gross profit for the year na 1,481,147. So to adjust our deferred gross profit, so debit tayo, deferred gross profit from IFF, 1,481,147, and credit to realized gross profit from initial franchise fees of 1,481,147. Okay? So this time, let's compute daw for the net income. So wala nagi present niya. So let's try to compute daw our net income, guys. So net income. So pila ang realized profit nato for this year? Pila ang realized profit nato? So we have realized profit of 1,481,147 minus your total cost. Sorry, not total cost, but total indirect cost nga 50 million, 50,000. So that means natay operating income na 1,431,147 plus yung interest income nato earlier na 778,637. So net income nato for this year under this case will be 2,209,784. Again, net income will be 2,209,784. Okay, so those are the items necessary to be considered in accounting for our initial franchise fees. So generally, ang problem lang man talaga under franchise accounting is the timing on the recognition of initial franchise fees. Again, sa initial franchise fees. Now this time, let's proceed sa recognition naman sa ato ang continuing franchise fees. O very excited ang atong slides na matapos. So we have their revenue from continuing franchise fees. So unsa daw to ang recognition nato? We recognize continuing franchise fees the moment we have earned it. Okay, we have earned it. So that means we will recognize it under accrual basis. So for example, it can be based on percentage of sales or percentage of income. So let us say 5% of net sales per year of the franchisee will be the equivalent of the continuing franchise fee to be paid by the franchisee to the franchisor. So let us say na ay 10 million nga net sales. So you just simply multiply it by 5% or um any percent nga agreed by both parties nga nakastipulate sa franchise agreement. So, hypothetically, for example, we have 10 million nga net sales and ang agreement nila is 5%. So, there will be a recognition of 500,000. So, debit cash for 500,000 and then credit to revenue from cost continuing franchise fees. Okay? Again, unsa ang reason nato nganong magbayad pa og continuing franchise fees ang ato ang mga franchisees? It is due to guys, expenses of the franchisor nga maka-benefit si franchisee. Okay? For example, advertisements or ads. Obviously, pag may ads si franchisor, lahat ng kanyang mga franchisee would also be advertised because they have the same name. Okay? For example, si Jollibee. So si Jollibee, pag may television ad si parent or si franchisor, lahat ng mga naka-franchise will also be advertised kay isa lang man na sila, 'di ba? For example, wala may mag-advertise nga Jollibee kanilang na branch o Jollibee Tagum lang, Jollibee drive-thru, Jollibee Highway, wala may ingana. So, ang ilang advertisement is Jollibee. So, that means that covers all Jollibee na mga branches or franchises. So, if ever na mga ingana ng mga expenses, so your journal entry will just simply be debit to franchise expenses credit to cash. Okay? Now, let's have option to purchase. When the franchise agreement includes the provision that the franchisor has an option to purchase the franchise business, if the option is granted at the time of the franchise agreement is signed, the initial franchise fee is to be deferred. When the option is exercised and the franchisor acquires the franchise business, the deferred revenue from the initial franchise is treated as a reduction from the franchisor's investment. Okay guys, when there is an option to purchase, when the franchisor has the option to purchase the the business nga naa kay franchisee, so palito ni franchisor ang naa kay franchisee, okay? That means ano daw, if the option granted at the time of franchise agreement is signed, the initial franchise fee is to be deferred. So initial franchise fee will be deferred so in its entirety. And then when the option is exercised and the franchisor acquires the franchise business, so the deferred revenue from the initial franchise is treated as a reduction from the franchisor's investment. So it will be deducted from the franchisor's investment. But usually, bihira ni siya mahitabo ang option to purchase. Okay, what's the point of what's the point of having franchise agreement or franchising if the franchisor will have it back, 'di ba? Or will purchase it back. So bihira lang ni mahitabo ang naay option nga palito ni franchisor ang business ni franchisee. But in that case, kung mahitabo siya, the deferred revenue from initial franchise fee will be treated as reduction from the franchisor's investment. Okay? So those are the necessary items or considerations nga ato ang i-remember in accounting for continuing franchise fees, initial franchise fees. So if you have any more questions, you may refer it to our video lecture, not our video lecture, but virtual class on our online class. And you may refer to the books of the following for supplemental readings and additional info. Again, that's it for this video lecture and see you on our next video lecture for this subject. And take note, next video lecture will be our last video lecture. Okay, last. Thanks God. Last video lecture. Okay, good luck and be prepared for your upcoming third exam and final exam. See you and good day. Goodbye. Goodbye.